right, hello everyone. This is John Lyons. I'm the EVP of Marketing over here at Class Valuation. I'm going to be giving us probably another 60 seconds here to allow for some additional attendees to make their way into today's webinar. I can see we got a few of you still trickling in here, which is great. While we're waiting on a few of these additional ones to come in here, again, I am John Lyons. I am just here for the housekeeping items of today's webinar. I'll be handing it over to your host here shortly. But in the lines of housekeeping, for those of you who are in attendance here, you will see on your screen you have two icons in your lower bay, that lower menu there. One will say Q&A, one will say chat. Those are there for your use, and hopefully you guys will be very active on those during today's webinars, as I'm sure you'll have quite a few questions stemming out of this. For the Q&A, if you have questions, we will have a 15-minute Q&A at the end of this webinar. So if you have a question you would like our panelists to touch on that they didn't during the webinar, please throw it into that Q&A box. I will be back here sorting through those, making sure we get those in front of our panelists to address. The chat feature is more for I will be monitoring that. If any of you are encountering any issues with your video, with the audio, please throw it in the chat. I will get to that, try to assist you as best I can. And hopefully today's webinar will go as smoothly for everyone as possible. And now with that, I can see we've got a good chunk of people in here already. So I am going to hand it over now to Matt Albino, who will be today's host for our webinar, our Leaders in Lending session, with today's topic being appraisal modernization. So with that, hello, Matt.
Hey, John, thanks. Appreciate the intro and the housekeeping. Matt Albino here with Class Valuation, Vice President of Enterprise Sales. Just want to kick things off by introducing the panelists. So from the Class Valuation side, we have Scott Rose, who's our Chief Innovation Officer. We also have John Dingman, who's our Chief Appraiser. And then we have Justin Alexander, who's the Director of Collateral Strategy and Innovation over at Fannie Mae. So I appreciate everyone taking some time to join us this afternoon. This is a continuation of Class Valuation's Leaders in Lending webinar series, and we're going to talk about the hot topic of appraisal modernization. Certainly has gained some momentum here in the last 12 months or so. So we're going to talk through some things specifically around Fannie's release, and let's get into it. So I think maybe to reiterate, right, from an appraisal modernization perspective, the why kind of gets washed over as we're looking at some of the releases of these new programs. So, Justin, from your perspective, can we kind of reiterate to the group and talk a little bit about the why behind all of this, why the push for these waiver programs and the overall modernization of our space?
You bet. Good afternoon, everyone. Happy to join you today. We've been on this journey for a number of years now. It's not anything that's brand new. We have had some policy announcement come out recently, but we've been on this journey to modernize the valuation process for a number of years now. So we've had pilot programs ongoing. We've been testing a lot of different things. We standardized last year we standardized our measurement standard to ANSI. We had our desktop appraisal product come out. Recently, we've had our value acceptance plus property data offering come out. So there's a number of things that we've been working on. And really the why behind it is we're trying to address some fundamental challenges that we see in the industry. A couple of things we're trying to address and that we're on a journey to improve is just to align the risk of the loan to the valuation product. So historically, we've had, kind of a one-size-fits-all appraisal process for all loans. And we all know that different loans carry different amounts of risk. So we're trying to think of ways to, align that loan level risk to a particular valuation option. we are trying to improve objective data capture. So, part of the appraisal process involves humans, and a lot of it is subjective. There's a lot of new technology that's available out there today that we want to try to take advantage of, and really try to get to a point where the data that's coming in is captured in an objective way possible. There's some industry pain points that we're thinking about. It's probably something that you all have heard about, but there's appraisal bias risk that we're aware of and that we want to try to address through objective data capture. There's just process inefficiencies. There's appraiser capacity constraints, although that's not an issue today in today's environment. A year and a half ago, 2 years ago, it was. And if you've been in this industry long enough, it's cyclical and it will become an issue again. And we want to have different valuation products out there available to try to address that issue as we see it. And then our big part of our mission is to help underserved borrowers. So historically, underserved borrowers don't get any type of appraisal flexibilities, and we want to try to create opportunities to provide some appraisal flexibilities to underserved borrowers. So that's kind of the why from our perspective. Interested to hear from the other panel members, anything you want to add.
Thanks, Justin. Go ahead, Scott.
Yeah, I can just, layer in. I think Justin did a great job with the framework there and coming from Fannie's perspective. And it makes me think back, John Dingman, initially when we first started working with these new concepts and ideas, going back to 2018 and thinking about thoughtful change, all the stakeholders who were affected, hearing Justin talk about objective data capture, we really thought a lot about how we could apply technology to this changing environment to ensure we had the right experience for all stakeholders. And there's a lot of important aspects we can talk more about today around that, but providing the environment for the appraisers when and if the data does become utilized in a hybrid process where they still have a very comprehensive understanding of that property, full digital twins, a lot of transparency, in a standard way that's repeatable, really supports the bias initiatives, the objectivity there. It supports the appraiser to ensure that they're getting all the information that they need if and when this data does pass down through those use cases. And really the use of technology in this process now compared to where we were back in 2018 and how far we've come, not only class, but all, a lot of folks participating in these programs and the importance of that.
I think it's interesting, and Justin, I appreciate it. I think of my mother who's on a fixed income, has lived in her house for 20 plus years, and she doesn't generally take money out. I mean, she put 37% down on her house to begin with when she bought it. But when somebody has a graduation or she has a new great grandchild and she wants some more, purchasing power with the money that she does have, the income that she does have, and she wants to refinance and take advantage of a better rate, there really wasn't an option for her. It was from her lenders that she was working with. It was an appraisal or nothing. And so I think it's pretty interesting that you have a valuation spectrum available, and that does involve the appraiser, allows us to remain relevant in the mortgage financial transaction process.
Thanks, John. And the valuation spectrum is an approach that we've seen in secondary lending for some time, and it's been successful. So I think it stands to reason. Let's talk about the impact to the traditional appraisal process. So as we're in these different methods, what's the overall impact to traditional appraisals?
Yeah. It's going to be minimal. We expect the policy offering that we announced in March that we're going live with over the weekend, this coming up weekend. We expect like a net new offering for that somewhere in the 3 to 5% range. That obviously is dependent on a number of different variables, the market area, lender, borrower profile, the market that we're in, but it's a fraction of our total loan population. One fact that a lot of people, don't know is that our traditional appraisal waiver volume as part of this rollout is actually going to decrease. So we're going to offer less traditional appraisal waivers and push some of those into this new offering that requires a property data collection. And so, there'll be a less traditional appraisal offer. And then, the net new offering on our new product is somewhere in the 3 to 5% range. And so the impact to the traditional appraisal is going to be minimal.
Anything to add, Scott or John?
I think not a whole lot there. I think it does help to maybe, cover some of the concern that maybe the appraisers have out there that this is going to have a huge impact on the amount of addressable market that's available to the appraisal profession. And I really don't see this having a huge impact there as well when you hear 3 to 5%, net gain in these programs, and that they are looking at rolling this in to help decrease risk on the existing waiver population, which is substantially lower than it was 2 years ago as well. So, overall, there's still much more loan transactions going through traditional appraisals than these other programs right now.
You brought up a really good point. I'm sorry, John, go ahead.
I was just going to say, I hear from appraisers often that there is some anxiety around a reduction in traditional appraisal volume. I have a slightly different perspective in the role that I'm in today, but from my seat, I look at this as an opportunity for appraisers. It is another couple of tools in our toolbox, if you will. And as opposed to a loan application going straight to a waiver, there is an opportunity that a value acceptance plus property data is upgraded to a hybrid or a traditional. That would involve an appraiser where it would not have in the past. And then hybrid and desktop in general, whether it's in test and learn environment or in the guides as it is today for desktop, is also an opportunity for appraisers to participate in this process and again, remain relevant.
We sort of jumped into my next topic, and it's around the need for appraisers as the appraisal process modernizes. Justin, what are your perspectives on the need for appraisers as we advance our industry here?
Well, at Fannie Mae, we believe in appraisers, and we think there's always going to be a need for appraisals. There's no secret initiative to try to get rid of appraisers here. We're really trying to make the process more efficient, and for certain loans that are really low risk, provide alternatives. For a loan with a 50% LTV that we've seen a couple of times on a refinance transaction in recent years, we just simply don't need a full appraisal on that. So that's a candidate for some of these alternative type products where we may want a current view of the property, but our models and we feel like our value is good on that, and in addition to the loan being really low risk. But at Fannie Mae, we believe in appraisers, and we think that there's always going to be a need for appraisals.
Appreciate the perspective, Justin. So,
Matt, just to layer into that, if you look at and look, some people have experience more than others with the class solution. But again, going back to the earlier comments, everything we developed was with the appraiser in mind, especially as you move more into the hybrid or the desktop solutions, maybe not as much as when you're talking about a waiver plus a property data collection. But a lot of these programs and the things that have been taking place up to this point have all taken the appraiser into consideration. And how do you roll out a program that actually benefits them as well, and that incorporates everything that they need to provide credible results and feel confident in what they're doing, and drive time efficiencies for them so they can earn more with their time. and increase, the earning potential there. So there's a lot of consideration to the appraiser and all of these modernization programs that have been worked on to date.
John Dingman, you and I talk about this specific topic a lot with new partners. Anything additional to add there?
I'm going to keep using the term relevancy, Matt. I think it's really important. I think it's an opportunity. I'm licensed in multiple states, but my original license was in Arizona. It's a mandatory state. And as a result, it requires a licensed or credentialed individual to provide an opinion of value on real property. So that's a privilege. It also represents, to use an appraisal term, my highest and best use. And the users of my services as an appraiser and our panels is going to be exactly that, to get an opinion of value on their real property. Any opportunity we have to ensure that we're participating in that process, I think is critical. And again, allows us to remain relevant.
Great. I guess I see a couple of questions in the chat already, and have this on my list to talk about. And Justin, to the extent you're able, there are questions around what exactly a waiver means, what that process entails from the GSE's perspective. I think there's maybe a viewpoint from the market that there is no valuation at all going on in the background. Is there anything that you can share with the group around the waiver itself and what that actually means, what that entails?
Yeah, I mean, as part of our policy announcement in March, we are going through an effort internally to rebrand the term appraisal waiver to a term called value acceptance. And it's something we've discussed for years. We feel like appraisal waiver implies that nothing is happening, and there's actually a lot that's happening on the back end. We've got massive amounts of data. We've got analytical models that are running. And so there's a lot that we take into consideration when we make that decision. And we thought a more appropriate name for it would just be to call it what it is. We are accepting the lender's estimate of value or contract price in a sales transaction. And so, what value acceptance is just a relief. We are rep and warranting the value of the property. And that's what it is. There's no, no field work needed. Now the new offering, value acceptance plus property data, we are making that decision up front and offering the lender a value acceptance or appraisal waiver, as we've used to call it, contingent upon a successful delivery of a property data collection to our API. So the main reason for that property data collection is that we just want a current view of the property. Our property data collection is a very comprehensive set of property data that actually includes more data at the point of inspection than any inspection I ever did as an appraiser. I was an appraiser in the Dallas area for 13 years, and it's more comprehensive than anything that I ever did. It's a lot more photos, a lot more data, a full floor plan, but we require that the lender, we are rep and warranting the value. The lender is on the hook for property description and property eligibility. So we're going to offer that waiver, value acceptance, contingent upon the delivery of that property data collection.
Appreciate that, Justin. Scott, anything to talk about from a solution standpoint there, and how class valuation solution supports the data spec that Justin and his team is looking for?
Yeah, I think, as I was mentioning earlier, we really looked at ways to leverage modern technologies to support these programs. And so we use a lot of, AI and computer vision, the same type of technologies that are used to drive self-propelled vehicles that are, allow us to gain highly accurate measurements programmed to a standard like ANSI, allow us to capture a very comprehensive and robust information about the property around, the major appliances in the home, year, make, model match, the flooring, inventory of fixtures and things of that nature, volume of spaces, a lot more data and information that is, allows us to do more in understanding property itself, right? And to do it the same way with 5 different people. I think we all know today there's a lot of discrepancy in terms of how properties are described, whether it's public records or MLS or one appraiser to another. And so our goal is to really be able to bring consistency and standardization and source of truth around how a property is described and make that repeatable across every property that we visit. So you send Matt, John, Scott, and Justin out to collect the data and information about a property, and you're going to get the same results from each of those data collections. And we think that's very important, to bring that standard to the industry and to help. But these technologies exist, we should use them in our profession as well. We have to advance along with the modern technologies that are at our fingertips today. And I do think, I would just add one more thing. I think it's really important that they are used. So there is a difference. And, ensuring that as we move forward in these solutions that, you're selecting vendors that can support you appropriately and that have the right tools in place to, ensure that you're getting the accurate information and in a comprehensive and credible way.
And appraisers do advance in technology. I mean, we're not using wheels to measure anymore, or at least I hope appraisers aren't. There's a large contingency of appraisers moving to a paperless office and dropping the clipboard using an iPad or something of that nature. But, I think there's an opportunity to embrace technology to drive efficiencies in our own practice. Scott's already talked about it. It was built, our solution at least, was built by appraisers for appraisers, and it was intended to inspire confidence so that the appraiser not only can meet their obligations under USPAP, but also the assignment conditions and the scope of work that are outlined in the forms by the GSEs, specifically Fannie Mae. And again, the hope is that the appraiser has all of the information that they need to complete that assignment credibly. And I know there's some questions from appraisers about whether or not the appraisers are involved in this process. One would be certainly property data collection, and there is the opportunity for an appraiser to perform that task. But again, the appraiser is certainly going to be the individual that is performing the hybrid desktop and or traditional appraisal, if that's where it evolves to on an appraisal assignment.
Thanks, John. Scott. I guess to talk a little bit more about how Fannie Mae specifically, in their adjustment of the traditional appraisal waiver, right? How is that affecting the overall volume and offerings? And Justin, I know you talked a little bit about percentages, but can you give some more insight and detail around, as you make these adjustments and you roll out value acceptance plus property data, how the offerings and the volume are going to be affected overall?
I mean, there's still an overwhelming majority of loans that come to Fannie Mae will still be required to have an appraisal. So whether that's a desktop appraisal or hybrid appraisal, we have not made a broad offering on our hybrid appraisal program yet. We're still in pilot on that. We do have an exception process as part of our new policy offering, value acceptance plus property data. But we think it's going to be relatively small. But even in a future state where we have the hybrid appraisal, the traditional appraisal, and the desktop appraisal, the overwhelming majority of the loans that come to Fannie Mae will be required to have one of those 3.
Perfect. Thanks for that, Justin.
And as far as like percentages on our value acceptance or appraisal waivers, as we've historically called it, I mean, Scott mentioned it earlier, those are way down, and that's really just a direct reflection of the market that we're in. Appraisal waivers get granted a lot more often in a heavy refi market. They don't get granted near as often in a heavy purchase market. So, those are really low right now. That could change, a little bit if the market turns, but that's kind of where we're at today.
How about lender obligations? How have lender obligations changed, if at all, with these new offerings?
So for value acceptance plus property data, we are taking on the risk from a value perspective. The lender is not responsible. We're value rep and warranting the value of the property. The lender is responsible for property eligibility and property description. So just like a lender is responsible today on a loan that gets a full appraisal, you can't deliver, even with an appraisal, you can't deliver a loan to us that's in C6 condition. You cannot deliver a single family loan to us with the property that's actually commercial. So there's just some basic things that lenders do today that will apply in this new program as well. You can't deliver a loan to us that's, where it's said to be, 5,000 square foot property, and it ends up being, based on the property data collection, ends up being a 1,500 square foot property. I mean, there's just some basic things that prevent lenders from being able to deliver loans to us, and that applies to our new program. And so we kind of look at it as, it's the same process that lenders go through today.
And so as lenders start to go ahead, I'm sorry, did someone want to add? So as lenders look to complete their due diligence here, where would you point them to find out additional information around these new processes?
We have a lot of marketing materials. The number one resource is our selling guide, which can be found online, but we have a valuation modernization website. I'm happy to provide a link to that in the chat that people can access, that provides really a lot of information on lender obligations, eligibility criteria, what a data collector is, background checks, requirements, things like that. So I'll provide that now.
I appreciate that, Justin. I guess while we're on the topic of lenders, we've got, I don't know, about 15 minutes here before we're going to go into some questions. I think, as from the lender's side of things, as they're evaluating these processes, looking to incorporate them into their current workflows, Scott and John, when lenders are looking to evaluate vendor partners, data collection partners, AMC partners, what's important for them to understand as they go about this?
I can go first, John, if you want. I think it's important to understand their ability, obviously, to scale and to cover the portfolio of loans for that lender, and how they're set up with their network and what's their vetting process for that network, similar to how you would on onboarding one of your AMCs or evaluation provider, and ensuring that they have the right practices in place, as well as what type of technology are they using. I saw the question in there around the responsibility of the lender on the reviewing that property data and information, and knowing that you have a solution that doesn't leave things for chance, right? That everything is going to be captured. It's going to be captured accurately. With Class, with our complete digital twin that we're capturing on site, literally a 3D model of the home and a digital representation of that property, you can ensure that everything is captured appropriately. We have 5 layers of validation that we go through versus just somebody in the field capturing 2-dimensional images that then go through a QC process. We have everything from the field provider to AI to virtual inspection to QC. And then in the event that there's an appraiser, you also have an appraiser able to look at that full property, a complete property, and not only relying on 2-dimensional images that may or may not capture everything important about that home. So really understanding the technologies, the tools, and how that information is presented to you. Are they providing you with summaries of what some of these items are that Justin was talking about that easily key you in on where you need to look in the report? to ensure it meets these requirements and expectations. And these are all things you should expect from your providers. I don't know, John, if you want to layer in anything further on that.
I mean, for lenders, I don't think it's that indifferent than it is for appraisers. Not all solutions are equal. I can't really speak to other technology providers, but not all desktops are equal either. It really is incumbent upon us to look at those solutions and look for solutions that provide a better consumer experience at the end of the day. And I think that's what we've accomplished here at Class Valuation with Property Fingerprint. Again, it does provide the appraiser a complete digital twin of the property. Scott already knows this. God, 4 years ago when we got involved in this technology, and Scott asked me to start leveraging the technology to measure a property. I'm a home measurement specialist. I'm very proud of this. I teach the measurement courses. So, Justin, I was excited when Angie announced, or when Fannie announced Angie last year. But Scott challenged me to continue to measure properties against technology, and quite honestly, that is a major objection that appraisers have, is the accuracy of this kind of tech. But I'm so close each and every time. 21 square feet on my house now, which is less than 0.5%, half a square foot on my daughter's house in Arizona. So, when you talk about those kinds of differences, it inspires confidence for the people that are using it. And that should inspire confidence for our lender partners too.
Yeah, and I would add as well, something I did not mention, and I think it's important that we do, is, we're talking about value acceptance plus data today. It comes out this weekend. It's going to roll out next week. But we also know there's Freddie Mac's ACE plus PDR. And so you have two programs out there, and it's probably important that your providers can offer you a solution for both. You may want to pivot and go one direction or the other, and having a solution that's fungible, like our property data advantage is important, right? You can have one site visit, collect all the data that's required for either program, as well as any other potential downstream products it may need to move into, like hybrid, for instance, if you were going in that direction. And then we provide our appraisers a complete virtual experience. I mean, I think one thing that's important is we have a better time getting appraiser buy-in and are able to get some of the best appraisers to do our work, because we're providing a premium experience. And you want to know that you're able to attract the best appraiser talent to do this work, versus reading a PDF with two-dimensional images that they might get from someone else.
And two of the words that stick out to me, Matt and team on this call, when I'm talking to appraisers and specifically those that are leveraging our technology, is trustworthy and not filtered in any way. And those two expressions are pretty impactful.
That's great. Thanks, guys. I couldn't agree more. I guess to round things out here, right? From the consumer's perspective, right? From the borrower's perspective, we are in the industry, we get in the weeds on this stuff, but there is a borrower at the other end of the deal, right? Let's kind of talk collectively about what the overall impact of these programs is from a borrower's perspective and the benefits that they ultimately provide the end consumer.
I'll jump in there. I'm an appraiser, so obviously, the appraiser aspect is important. But let's be honest, in a transaction where potentially it's not necessary, having that certainty does reduce anxieties in the transaction for both buyers and sellers. It can be done more quickly and for a lower cost as well, right? So the consumer is benefiting from a lower cost solution that comes with certainty and can happen in a much, in a rapid way, so that they know everything and understand things sooner in the transaction cycle. And I think all of those are benefits to the consumer for sure.
I would just add on that, just to be clear, in no way do we prescribe or mandate that a lender or consumer take up an appraisal waiver or take up a value acceptance post property data or any appraisal, any valuation product. The traditional appraisal is always an option. So if a consumer wants to have that on any given loan, it's certainly something we're okay with.
And I know we're talking mostly about value acceptance plus data here, which is a legacy waiver plus data product. But we also have done tens of thousands of hybrid using this technology in the process. And we measure that very closely, and we can see that every single experience is improved. For the appraisers as well, it's a significant reduction in revision rates coming back to them to make changes. It's a significant reduction in revision rates coming from the underwriters, and it's a significant reduction in requests for reconsideration. And so because of the way the data and information is standardized and captured, fully transparent, it provides a lot more consumer confidence. And we know from the experience that we're seeing less issues in the cycle when we use the digital solution and compared to traditional.
What an advantage. No appraiser likes revision requests, that's for sure. And so if you can reduce that friction, I know there's a lot of attention, Matt, you and I talk about this a lot as well, focus on turn times from appraisal order to delivery, but there is an opportunity to reduce cycle times as well on the back end, and that is by producing better quality reports, less revisions going back to the appraiser, interrupting their day as well for those types of requests.
That's a good call out, John, and super important from both from all parties, right? The appraiser's perspective, the lender's perspective, and the consumer's perspective. Team, we have about 7-8 minutes before we're going to open it up to questions here from the group. Are there any other closing comments or thoughts from you, Justin, Scott, or John, or do we want to jump into questions a few minutes early here?
I don't think I have anything additional. I was just reading through some of the questions. I don't know, Scott, John, you got anything?
I'm good. I think we've done a good job at covering a few topics here. So I'm sure there's plenty of questions and that we can get to here.
Yeah, for sure. There's a bunch of good questions in the chat already. So folks on the line who are listening in, please feel free to use that chat option to send questions our way. We'll try to get to as many of them as we can here. But I guess, a very basic question, but one that comes up a lot and one that's certainly pretty warranted. Someone wants to know who's doing the property data collection.
Yeah, these are typically, third-party inspectors. We've had in pilot, we've had a lot of insurance type of inspectors. We've had appraiser trainees. We've had real estate brokers, and we've had appraisers doing property data collection. We do have a very, rigid property data standard. We do a lot of testing of mobile applications that the property data is collecting in, just to make sure that it's intuitive and that all the data can be, captured in a, easy, intuitive way. But it's going to be up to the AMCs that participate in the program. We do have some basic requirements. We do require that they have training programs and a background check process put in place, but we're going to leave it up to AMCs to manage that.
Yeah, and like for us, for instance, the data capture specialists that we leverage, we focus on customer service and experience there as well, right? You want the consumer to have a good experience, and we want to send the right people out to support that process and support the consumer, and really leverage the technology to do the work, so that you can limit the amount of training that's necessary specific to property and measuring and things of that nature that we've really gotten around with using these advanced technologies. So leverage the technology and try to have the highest quality people going out in the field and interacting with the consumer.
Yeah, I would just, I would just say that, listen, the property data collector could be an appraiser or trainee. We all know that. And I think, some efforts by the GSEs, including Fannie Mae, to encourage appraisers to seek out those opportunities. Fannie thanks to you for doing that, Justin. But they could be the home imagery professionals that already serve the market today. Those individuals are trusted by real estate agents to access properties, photograph them, collect data for a listing, etc. They go through some significant training and, again, background checks as well, which are prescribed by both of the GSEs. And it really is about leveraging the technology. Again, I think of two objections appraisers usually bring up to me. And that is, this person isn't going to know how to measure the property, and they're not going to know what photos I need, right? And so I'd like to be able to guide them in that regard. Well, that just means that there's a lack of understanding around the technology. You can leverage the technology in an iPhone, for example, photogrammetry and LiDAR, to measure the property, to generate that floor plan to an ANSI standard, which can be done. By the way, digitally to the nearest inch, probably more detailed and inaccurate than even I could do it. And then, because it's a repeatable process and it's a digital twin of the property that offers not just the static images, as Scott mentioned, but a 3D tour, it allows the appraiser to have that virtual experience. So there are no missing photos, no missing areas. And honestly, I do get the concern regarding things like smells and sounds. We do get a lot of feedback from the property data collectors on the existence of those things, with notes to the reader of the report, including the appraiser. But appraisers experience those so infrequently, just based on surveys that I've seen or have even completed. But at the end of the day, if the appraiser believes there's some concerns there, then Justin and team, the appraiser has the opportunity to upgrade that to a traditional appraisal if they so deem it to be.
What's great about that virtual environment too is that the appraiser can take photos of the property as if they were there and move those into their report. In the use of just data capture alone, if there's something that was missed and needs to be captured, we can just go back into the digital twin, capture that photo, and support the process without a revisit to the property. And so these technologies also reduce the need for revisits and again, impacting that consumer experience in a negative way when you have that full digital twin capture of the property from the original site visit.
I appreciate it, guys. Justin, I'm reading through these and a lot of them are directed towards you. I apologize for calling you out in advance, but I think they are good questions. And the next one is with regard to value, on the waiver side, is Fannie Mae accepting the value or purchase price or just their risk on the loan? And how is this protecting the buyer at the end of the day?
Well, as I mentioned, there's a number of things we're looking at. We're certainly looking at the risk of the loan. If we deem it to be a very low risk loan, then it would potentially qualify for an appraisal alternative. We also have analytical models that we use to help us make those decisions. So we have a massive database of appraisals that we a number of different ways. We will go back and look at previous appraisals and with our models try to mark to market that value up to current date. But then we also apply AVM models. So in terms of how it protects the consumer, I mean, our loans that get delivered to us with an appraisal waiver perform very well. It may be a surprise to some, but in the 2008 crisis, loans delivered to Fannie Mae with an appraisal waiver performed better than loans delivered to Fannie Mae with an appraisal. And that's not to say that appraisals are bad, but it is to say that we have a decent process in place for identifying lower risk loans and offering appraisal alternatives on those loans.
Appreciate the insight, Justin. There's a bunch of questions in here around hybrid, right? And to the extent you're able to share, some folks are asking, when will we see hybrid? How's it going to be incorporated into this overall cascade, if you will?
Yeah, it's the next evolution of what we're trying to do with our modern valuation spectrum that you will see on the website that I referenced earlier. I think you'll see it within the next year, or at least that's my hope. We've been testing it in pilot for about 4.5 years. We've received over 270,000 hybrid appraisals, and we've analyzed them every which way possible compared to traditional appraisals. So we feel very comfortable with the data. And that's what we're, after this new policy rolls out, we'll kind of shift gears to focusing on that. There's a lot of variables in play. I mean, we have a regulator that we have to meet with on a regular basis. So we also have, Freddie Mac that we're engaged with, or we talk to on a regular basis. So there may be a desire for us to align, with Freddie Mac on some of these initiatives. So there's a lot of variables, but we do intend on making a broader hybrid offering later this year, first part of next year.
That's great to know. Thanks, Justin. Interesting question here as I'm reading through some of these. There's a listener or viewer asking about how does this affect smaller to medium-sized AMCs, and how are they expected to support their clients? And this might be geared towards Scott and John, but any thoughts and/or advice for other AMCs out there?
Well, I'm sure Justin probably has some comments on this as well, but I think that there are options out there now, the technologies that can be licensed, class license. We license our technology, we provide managed services, others do similar things. There's options out there in terms of how you can build a program around these solutions. And, I think that they'll just have to start navigating that and understanding where and what's available to them. Some of the smaller ones probably they might just want to do managed services. It's like Justin mentioned, right now, it's a fairly small population of loans, and you want to be able to support your customer. And you can, click and order the data collection through an organization like Class or others, and be able to support your customer. And it'll probably have very low impact to your business, and you can continue to provide your core competency around supporting them on the appraisals. So really looking at managed services and licensed technologies that you can do out there. And there's hybrids too. You can build your own technology, I suppose, and leverage other tech to support that. But that would probably be my direction there, or my thoughts on that.
Justin, any thoughts from your perspective with regard to smaller or medium-sized AMCs in these processes?
With respect to what? I'm sorry, there was a question that was asked around appraiser liability that I was trying to pull up a hybrid appraisal because I wanted to address that, and I missed part of the question.
All good. We were talking about what's the expectation for smaller and medium-sized AMCs who may or may not have the infrastructure to develop these technologies.
Yeah.
How are they expected to support their lender partners?
Yeah, we have a list of AMCs that we have vetted and approved on the website that we shared. We're adding to that on a regular basis. We have an update going out in the next day or two that will include more AMCs on that list. We do encourage. We understand that some AMCs will not have the ability to build a mobile application or connect to our API, and that's okay. We encourage that AMCs work with other AMCs that have those capabilities. If they're willing to work together, and we've already seen that. We've seen quite a few AMCs reach out to us and say, "Hey, we want to be up and going on day one. Can we work with some of these other AMCs?" And of course, we encourage that.
Yeah, I would add, Matt, I mean, I was mentioning it earlier, but we are doing that currently at Class today. We do have AMC partners, lenders that have direct panels, and want to be able to continue to offer to their direct panels can leverage these managed services as well, and they can still work on, you know, the direct panel engagement that they have. And we have, yeah, AMCs licensing the technology, and we have AMCs who use managed services as well.
Yeah, I mean, I'll just say overall, it's important as we, you know, as we develop these solutions, right, that we make them available to other AMC providers and partner with those folks. It's encouraged from the class perspective, for sure. Justin, you mentioned a question that you were wanting to address.
Yeah.
Specifically.
Yeah, there's a couple of references to appraiser liability when relying on a property data collection, and I've seen the same thing mentioned at conferences and on blogs and on appraiser forums. We worked very hard to reword the statement of assumptions and limiting conditions in the hybrid appraisal to relieve the appraiser from that liability when relying on a property data collection. And I would refer you to number 3. I won't read the whole thing, but it starts off, the appraiser has relied on data provided by third parties in this appraisal report. That's the first sentence. The last sentence is, the appraiser makes no guarantees, express or implied, regarding the accuracy of this data. So in our mind, it's just like, you know, the normal process that an appraiser goes through, and I am one. Technically, I relied on a third-party data collection on every appraisal I ever did in the form of an MLS listing. So that MLS listing is a third-party data collection in my mind from a real estate broker. And so we thought about appraisers concerned around liability, and we modified that limiting condition. So you know, anytime you see or hear appraisers being concerned about that, I would just refer you to number 3 in the hybrid appraisal.
It's really important, Justin. Thank you for reading that. I pulled it up at the same exact time that you did. It's really important that appraisers access specifically those forms. I would download them, read them. It's a really good exercise to read through in many ways, as every year on an annual basis. But I thought it was really poignant at a conference this past week. One of the E&O providers was there and speaking, and they talked a little bit about third-party data and reminded appraisers that we rely on a ton of it. And sometimes not even from the direct source. We rely on flood data, often not from FEMA, but from a data aggregator. We're relying on the assessor for their data, MLS records with real estate agents, as you mentioned, Justin. So it is an exercise that the appraiser must go through. It's their due diligence to obtain verifiable and credible information to complete that assignment. And we see it can be done on a regular basis. And we do it often without ever personally inspecting a property, which by the way, isn't required in USPAP. And I would encourage appraisers to visit Advisory Opinion 2, which discusses real property inspections, including a scenario where there is a hybrid, in other words, a bifurcated inspection process.
Thanks, John. Thanks, Justin. Let me look through here. There's, I mean, a bunch of good questions, and people are just looking to understand these processes a little bit more. I mean, one viewer is asking, are reconsiderations of value allowed? And we talked a little bit about this, John Dingman and Scott Rose, but specifically, are there procedures to dispute the data collection piece?
Do you guys want to speak to your process on that?
John, you want me to take that? Yeah, it would work in the same manner that the dispute process works today in the appraisal process. We have a request for reconsideration process in place where if there is any potential inaccuracies or information that people feel wasn't captured appropriately, they could use the same process. I will say that's a big value also to the technology because again, it's totally transparent. It's pretty hard to mess that up, but definitely there's a process in place that follows the same lines of communication that an appraisal would. John, do you have anything else to layer on that? Or
No, I mean, look, there's another question in the chat that talks about the interested parties, and they have an interest in showing the property in the best light. And of course, that may limit the appraiser's exposure to the property. The fact of the matter is, at least again, for our technology, it is a digital twin of the property. And so it's a virtual tour of the interior and the exterior, all the 2D flat images, smart tagging and asset capture, really cool stuff where we provide the appraiser the opportunity to view the property objectively rather than subjectively. And we think that's why we get better results. And that's reflected, by the way, in a reduction in the reconsideration of value process using digital and property fingerprint to begin with. But yeah, anybody who has questions or concerns about the validity of the data can certainly question it, and we can get that resolved.
I saw one question in the chat, and Justin, you can keep me honest here, but it was, can lenders directly engage somebody to do the property data collection and not go through an AMC? And I believe that absolutely they could, assuming they were set up and had the processes in place to do so. And, you can license the technology. Class puts it out there, for appraisers that want to go support the lenders they work with directly and build a property data collection business. You can license the technology and support your customers directly as well. So I think there's a lot of opportunity there in the future. I see for appraisers to continue to build and expand their businesses through these programs as well.
Yeah, totally agree with that. On the vendor approved list that I mentioned earlier, that's going to be coming out or updated in the next day or two, we have broken out into kind of two different sections: full service providers who a lender could call on to get a property data collection fulfilled, and then technology only service providers that a lender could engage with directly if they wanted to use their panel and manage the process themselves. So it is possible.
It's great. Well, it looks like we're coming up on time here. Gentlemen, look, thank you so much, Justin, Scott, and John, for the loads of information. We appreciate everyone who took an opportunity to dial in or come to the webinar. Look, the appraisal industry here needs some thoughtful change, right? And we're getting there. We're getting some momentum, and this is exciting stuff. Appreciate everyone, and thanks for your time.
Thank you all very much.
Thank you.
Thanks, everybody.